Good morning, traders. Welcome to the Phoenix Blue morning update on Friday the 26th of February. This is brought to you by Tom Colley. I'm one of the Phoenix Blue team. We will be looking today, or focusing today, on trading the ranges. The markets are very much range bound, although volatile at the moment. So when you see we go through the charts, you will see the vast majority of the trading opportunities or trades we're already in are range trading. Okay, over to the news. Not a lot of news, as the case has been all week. We've had Mark Carney speaking overnight at the G20 conference in Shanghai. Those meetings of the G20 go on all weekend, so we may see information coming out of those, news reports coming out of those that might have an influence on the market. The one big news announcement for the day, however, is the preliminary GDP from the US at 1:30 this afternoon. Also worth noting, we've been doing this all week and will continue to do this until markets change. Central bank speeches from two FOMC US central bank members, Powell and Brainard, speaking this evening. So any sort of trading around there or intraday trading, be very cautious of that at this moment in time. Okay, over to the usual suspects. US dollar, Chinese yuan, very much a continuation of what we've seen through the week. A drift in the devaluation of the yuan, but nothing hugely significant. We know we had this big move down here. It will be interesting to see how this reflects whatever comes out of the G20 meetings over the weekend. Okay, with the Shanghai Composite. Well, yesterday when we looked at this, the slide must have been a little bit early. We had a bearish bar, but it wasn't of the nature there. That's massively significant. We said it was potentially profit taking ahead of the G20 meetings. We'll wait to see what happens next week, but as we stand there at the moment, we're again bearish that market due to that big move down back below the 2015 lows, which we've been watching for the last 6 weeks or so. Over on the Nikkei 225 in Japan, the market again range bound. I think we've had 8 or 9 days within a range here, so no conclusions to be drawn from that. So we'll go into next week and see what happens there. The dollar index, we were watching this earlier in the week. We saw an intraday break above 97.50, which we see as a significant level. That break didn't sustain, and price is now back below 97.50. We had a bearish day yesterday, but we still are looking for a break above this level to move back into a bullish scenario on the dollar through the coming weeks. Okay, US dollar JPY, the yen pair. We talked yesterday about a trade we taken the afternoon before at this level here. This was replicating the trade we also took at this level, which was based on what we believe to be Bank of Japan intervention. They appear to have drawn a line around this 111 level. At this point, we had a really strong confluence between almost every yen cross pair. Price came down to this level again. We didn't have the same degree of confluence, but the level had been proven previously. We took a trade, early profits taken off the table, stopped to break even, and that trade's now closed out with a 3-to-1 reward to risk. Another market similarly trading the range in a similar style. We entered this market at this point here again. Money off the table early for a small profit, stops to break even, hit our target at 1.106, which was a 2-to-1 reward to risk. We now immediately had a back into a short trade to trade with our bias down in the initial basis for a T1 target down at the bottom of the range here. Because our bias is short, we also have a longer term T target down at this sort of level. The contrarian trade short there against our bias was at reduced risk. The trade with our bias will be back to a normal level of risk. Okay, crude oil. Very volatile day yesterday. We had a big move down, followed by a complete reversal and a big move up. The press believe this was because of confirmation of a meeting between 4 big oil producers, being the Venezuelans, the Russians, the Saudis, and the Qataris. This is only news of a meeting in March, confirmation of a meeting in March, with no set agenda, and all the news or all the suggestions around these meetings have been around fixing oil production, i.e. not increasing it rather than reducing it. So in true significance, not really very significant, but this market is so edgy at the moment. We saw a big move, a big reversal intraday move there, and unfortunately that meant that our long term, or we've been sat on an entry long term under here at this sort of level on US dollar CAD. That came straight through our entry and stop, and through the trend line which we were using as confluence to give us the probability on that trade. So we took a loss on that trade. But as a day of the whole, we've already talked about 5 times risk win on the yen and the euro. So 1 risk on there. The net result yesterday was plus 4 times risk. So a nice day, despite taking a loss that nobody ever likes. Another range trade here, US dollar CHF, the Swissy. We have an entry at this level here, through support through this level. We'll be looking to take that trade up to this level where we'll take money off the table, stops to break even. A second target towards the top of the range at this level here. So as I said early on in this video, very much looking for range trading opportunities. The S&P 500, we've been watching this level for a long time, this level around 1970. There's a smaller level here that has been broken through the end of yesterday, throughout this morning. This order is now in place. Although when we originally identified this level, price was down at this point. It had broken previous lows over here. We were very bearish, the market. Our stance isn't as bearish as it was in the shorter term, so we will be looking to take profits at first profits through this level here, second profits potentially around this low here, but we will be looking to potentially or to run a small amount of risk down to this level if that's where it comes down to, and even potentially just to see whether it breaks this level here. That would be hugely significant, but it doesn't appear that the market's quite ready for this at this moment in time. So more of a range trade in the short term. We still, in the longer term, see this as a bearish market, but we will need to see a reversal back to a really strong risk-off scenario for that to happen. Okay guys, well that brings Friday's video to an end, the end of another trading week. If you've got any questions about this video specifically, or you'd like to talk to us about things in general, or making a point to come and see us about how we can help you move your trading to the next level, please email us at info@phoenixblue.co.uk. Okay, all that remains for me to say is goodbye and have a great weekend. Thank you for listening.